Hello and welcome to another exciting episode of KaleidoCAST. Today we'll be discussing a hot topic that has been buzzing in the financial worlds for the past years: digital assets. According to the association AIMA, numbers from 2022 show that 1/3 of hedge funds are already actively investing in cryptocurrencies. And with more and more investors choosing to join the movement of these digital assets, maybe you should consider doing the same. Well, watch this conversation and make up your own mind. And with me here today to make that decision a little bit easier for you, I have our own crypto superhero, the head of digital assets here at Kaleido, Markus Abbassi. Thank you so much for being here today, Markus.
Hi, Ina. It's a pleasure being here. Thanks for having me today.
I'm very much looking forward to this conversation. However, I feel like we have to clarify one thing first, and that is what digital assets actually are. Because I have a stomach feeling that a lot of people feel a little bit skeptical towards digital assets because they don't really understand what it is. So can you provide a simple explanation?
I try so. Let's start from the big picture. So basically digital asset is everything that's holds online digital in a digital way. Can be pictures, can be music, can be videos, but typically also in-game assets, for example. What we're talking here today about is a rather different subset of these digital assets. It's called cryptocurrencies, for example, Bitcoin, Ether, Litecoin, or Cardano.
Okay, so for this conversation, when we're talking about investing in digital assets and making it a part of the portfolio, it's cryptocurrencies.
Exactly.
And what are cryptocurrencies?
That's also a really great question. Cryptocurrencies, as the name currency says, it's a type of money, it's a type of an asset, which is typically not issued by a central bank or by a government. It's also not backed by it, but it's completely decentralized and running on a decentralized ledger called blockchain.
Yes, the word blockchain, it always comes up and ruins the conversation for me because I find it difficult to understand.
Yeah.
Can you explain in a simple way what the blockchain technology is and how it works in relation to cryptocurrencies?
Yes, exactly. Imagine you have an account book and you know that some participants in a network, they own a certain specific amount of cryptocurrencies. And this account book is not just managed by one counterparty, e.g. a bank or just another trusted entity. It's controlled and managed by all the network participants in the space. And this provides this intermediary-less and frictionless provision of this account book, which then says and agrees, where the majority agrees, how much of the specific coin you own.
Yeah, that was a great explanation. Thank you. It cleared up a lot for me.
Perfect.
And one really must have lived under a rock not to heard about all of the discussions around blockchain and about cryptocurrencies. Why do you think it has received so much attention?
Basically, in my opinion, the major point or the major aspect is definitely the price action that has happened in cryptocurrencies. So there were many headlines, many published articles about people that got insanely rich, mostly overnight. Obviously also a lot of people that lost a lot of money in scams. This is typically for the crypto summer, for the bull markets, when the headlines in the newspapers are driven by such stories. On the other hand, we see during the current crypto winter, which is tending to fade out slowly but steadily, we see that people are starting more to talk about technology, about the products, and also the favors of Web3 and the whole technology about distributed ledger technology behind it.
It's very interesting. And I feel like now I've got the basics set. And that makes really the perfect segue into the next thing that I would love to discuss with you. And that is adding digital assets or cryptocurrencies to an investment portfolio. What would you say are the key benefits of doing so?
I need to tell you, there are so many benefits one should add cryptocurrencies to a portfolio, but maybe let's structure it that way that we take three main aspects that I currently see. So the first one is exposure into innovation and technology. So there's a whole movement going on. It's a huge upside potential in the market, which is growing, obviously. This is definitely the primarily aspect. So the whole topic around Web3, so starting from the internet of information to the platform industry, now moving to these decentralized aspects of Web3. And the second one are definitely also the capital gains when investing. I want to tend to invest in an asset which stores value or increases in value at the end of the day. And this is definitely also the aspect that we can, or we're expecting out of this assets at the end of the day. And last but not least, it's also the diversification aspect, because cryptocurrency historically tends to behave a bit differently than, for example, stocks or traditional bonds.
Okay, fascinating. So to summarize then, it's about exposure to technology or innovation and the potential upside that you can get from this. And finally, the diversification effect.
Definitely.
Okay, so if we flip the Bitcoin then, look at it from the other side, what are sort of the negative aspects of adding digital assets to a portfolio?
The negative aspects, I would phrase it a bit differently, like the more challenging aspects of adding cryptocurrencies to a portfolio is for most of the investors, the volatility and the drawdowns that are observed with these prices. So we, for example, for Bitcoin, we usually have during all this 4-year cycle, these halving cycles, we have drawdowns of 80, 85, 90%. And obviously also tremendous gains in between. But this volatility, this fluctuation is definitely a huge challenge. And the second one is the regulatory topics and the legal topics. So we currently observe in the United States that there are many discussions going around how cryptocurrencies should be treated. Is it a security? Is it a currency? How does it fit in the current structure that the legislator knows? Yeah. And maybe to add on that, I would also try to highlight how beneficial the situation is in Europe and in Switzerland in particular, because we already did in 2021 the legal amendments to have registered securities here in Switzerland. We have now the MiCA regulation in the European Union, which came into force and is currently being implemented. I guess these are really beneficial movements embracing also the favor of this Web3 technology.
Some good points. And with this high market volatility, should one really then have cryptocurrency in the portfolio, even with just a small percentage?
Yes, indeed. I guess the topic about the percentage is one topic which is more related to a ballpark figure. But on the other hand, it's also kind of the add-on, the benefits that we can bring into diversification aspects to a portfolio. So we recently conducted a study on that, where we compared the 60-40 portfolio, 60% in equity, 40% in bonds, by adding 5%, so reducing the 60-40 part, adding 5% of Bitcoin, which resulted in a pretty astonishing result at the end of the day. So we could increase since 2013, which was basically the start where most of the liquidity of Bitcoin was accessible to the market. We could increase the portfolio return by more than 20%, whilst just taking in a higher drawdown of roughly 3%. So what does it mean? We could significantly increase the returns by just taking a smaller amount of risk, or by adding on only a smaller amount of risk to a portfolio.
Wow, that's really fascinating.
It is, definitely.
And is that what you would recommend for most then average conservative investors, to have 5% of the portfolio in cryptocurrencies?
As I mentioned, this is I would rather consider it as a ballpark figure. It depends on the risk aspects that an investor is willing to take of the investment horizon and many other factors. And I consider it also as the role of us as a bank when talking to our clients, that we find together a solution that it fits the purpose of the portfolio, like of the wealth structure, and that's why we are here for.
Yeah, that sounds like a good way to go. And what do you think after hearing all of this? Are you curious as to adding one 5 or 10% of your portfolio into cryptocurrencies? Or are you still more on the fence about this? Well, if you're still in the I need more information phase, then I have some good tips for you. First of all, I would recommend that you check out the description below this video, where I have linked some very relevant blog posts on this topic. Secondly, you should know that every month we publish an update about how the cryptocurrency market is doing that Markus is responsible for. And you can find this on our YouTube channel as well as on our blog. And thirdly, I highly recommend that you go ahead and follow Markus Abbassi on LinkedIn, where he publishes a lot of crypto snacks. However, if you've been sitting in this conversation and getting really fired up about this, and you moved into the I want to explore my options phase, well then, Markus, what should this person do?
Then it's now your time to approach us, and we're going to sit together and have insight talks about this Web3 technology and blockchain. What we can provide you as Kaleido is a convenient, secure and regulated environment to dig into this amazing topic.
Thank you so much for explaining that and for taking the time to be here today. It's been a joy.
Thanks a lot for having me, and see you next time, Ina.
Thank you for watching. We hope to see you next time on KaleidoCAST.